Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Eric, thanks for being here.
Hey, thanks for having me.
No, this is great. You do great work, Eric. I really just want to tell you that. Thank you.
Thank you.
Yeah, you've been all over the whole Bitcoin thing and the assets coming in. It's really been fascinating to watch. You know, I know a thing or two about ETFs, I suppose, but I don't know the ins and outs like you do. So, you know, I've really been looking forward to this conversation. Strazza, if I start stealing all the questions, you could jump in. Strazza doesn't like it when we get really good guests on and I just take all the questions, you know?
He's just not a good group interviewer. Today will be interesting.
Yeah. Let's start with the elephant. I want to hear about the elephant.
Okay,
Hold on. I saw Eric at what was it? The Miami ETF conference.
Exchange. Yeah.
Yes. Say hi and introduce myself. Well, you're surrounded by people everywhere you go. There's like a line of people.
At an ETF event.
Yeah. Why do you
in reality, it's just not like that. But yeah, I mean, I've been in the industry for 20 years and I'm in the media. And a lot of times it's really just the issuers who are looking to market, right? So I have a podcast and a TV show and I write. So they're like interested for me to cover their stuff. So I try not to get a big head over it because a lot of it's people want attention, but it's a genuine scene. And I've been in the scene for 20 years. So I should know people by now, hopefully. And I do. And that one is like dense. I'll go to other conferences where I know a fourth of the people or even less. Those are the ones sometimes I'll bring my family because I'll have more like downtime. But Exchange is like so packed. I can't do anything. It's like a 12-hour whirlwind.
It must have been exhausting.
Yeah, it is.
Yeah, it is.
we talk about, secular growth sectors and industry groups on here as analysts all the time. You've been involved in one for the past 20 years, just from the ground floor. The growth, it's been a mega trend for ETFs. When does it end?
Never.
I think they'll be here for a while. There's a lot of talk about direct indexing, replacing ETFs. Some people talk about tokenization. I just think the ETF just arrived. Like we just got to this investor utopia where you can get almost anything under the sun with one click of a button anytime you want for almost no fee.
Yeah.
It's beautiful and it's tax efficient. We just got here a couple of years ago because ETFs really, I think they broke through in 2021 when they took in $1 trillion. That was when my one-man army show ended finally within Bloomberg. And even my company was like, all right, we got to get behind this. I think that's when like Morgan Stanley jumped into ETFs and Federated and Capital Group. 2021 was the big year that everyone just said surrendered. And I think when you think about tokenization, direct indexing, a lot of this stuff to me tries to reverse the pendulum a bit. ETFs are fast, good, cheap. Direct indexing is a little more complicated, a little more expensive. Tokenization, I just think that with ETFs, they trade on a public exchange. There's so many regulations around ETFs too, that you have all this stuff, plus they're safe. I mean, and plus you got these giant companies who really don't want any kind of a PR problem. This is part of the reason why I had no doubt that BlackRock and Fidelity jumping into the Bitcoin race would be so big, because it's not just that a Bitcoin ETF exists. It's that some of the biggest issuers who are serious are launching them, and they do not mess around. They've got hundreds of lawyers and compliance officers and legal processes. And that's really a really big deal for a lot of the more serious advisors of the world. Gives them cover and sleep at night versus buying something on Coinbase, which can be a lot of commissions, or having a wallet. That kind of self-custody can be give you nerves. So I just think that ETFs in general are, I've always said they're like a mutual fund with benefits, and I equate them to the MP3. To me, they have made all other forms of music, vinyl, tapes, CDs, they just all clunky compared to digital. And so I thought that's my best metaphor for it. And it's why I just dedicated my whole career to it. So I don't see them being disrupted for a while. At some point, we'll evolve into something else. But remember, we just got here a couple of years ago. Mutual funds had a 100-year run. They started in the 1920s, and they're just now dying off, right? That's 100 years. So I think we go at least 30, 40 more with ETFs.
One more question before we get into the current markets. I wanted to ask you about that transition from mutual funds, right? Can you explain where the 401k situation falls in, and the exposure to mutual funds? Some of them allow ETFs, some don't. Do I have that right? And how does that transition look into the future, you think?
Yeah, mutual funds are not going away per se. And I see one guy just commented, "I love my physical media." And look, even closed-end funds have $500 billion, and they are really bad. They're the equivalent of like a 8-track tape, but they still hang around because there are either people who like to play the percent premium discount. I'm not dumping on all those other kind of things. I just think predominantly going forward, ETFs will be the king. So your point though, 401k plans are kind of like mutual funds Alamo, because ETFs do lose some of their superpowers when you put them in a 401k plan. You don't need to day trade your 401k, so intraday liquidity doesn't matter. You can get the institutional share class of a mutual fund in your 401k because your whole company is rallying together as one big investor. Therefore, the cost difference isn't as great. And then the third thing is the tax efficiency goes away because your 401k is tax exempt. So it's ETFs have less power there. That said, when you look at the 401k assets, there's about 4 or 5 trillion-ish. Over half of that is in index mutual funds that cost nothing. So the ETF revolution, so to speak, is also sort of co-joined with the passive revolution that Vanguard started. So index mutual funds rule the 401k market. That's why ETFs sort of took the index mutual fund and said, hey, let's make this trade. So overall, 401k plans, like I'm in a 401k plan and I don't use ETFs in it, and I'm happy because I have an index mutual fund I-class fee and I'm not trading it. So I could care less. So I don't even complain there's no ETFs, and I'm an ETF lover. So therefore, I just think 401k plans are going to get overrun by the passive low cost thing, even if it doesn't mean the ETF will be part of it.
Is there anything stopping a 401k provider from allowing or offering ETFs?
Yeah. They're trickier because also when you buy a mutual fund, there is no bid-ask spread. You just buy it at NAV. Right. With an ETF, you have to pay the spread. So it could be costly to kind of buy every week or whenever the 401k has to buy. There's also some regulations about like shares and fractional shares, where as a mutual fund, you can just buy whatever you have in dollar form in that NAV. So there's a little bookkeeping accounting that just make ETFs also easier. And it's for those reasons. But for a small plan that can't afford the I class, that is where ETFs make sense, because those little costs get overrun by paying the A class fee versus the I class fee of a mutual fund. So I've heard of some smaller plans outsourcing to all ETF 401k plans, which to me makes sense. But the bigger plans, if you can afford the institutional class, I always think ETFs generally gave the I class fee to everybody, because mutual funds are designed as regressive tax systems. The less you have, the more they charge you, which sucks. So only the big investors get charged low fee. That's how they attract the big investors. So the I class ETFs are all I class or cheaper. Sometimes they're cheaper than the I class. And so that's a beautiful thing, right? They basically eliminated, and so everybody pays the same fee in an ETF, but it's all institutional level fee, which is cheap.
All right. Now that we ate our vegetables, we talked about 401ks and everything. Now let's get down to the good stuff and why we're here. Going into this Bitcoin ETF thing, and I've been a huge bull, so I'm not one of these like anti-Bitcoin people or anything like that. Quite the opposite. I guess assumed that there would be a lot of inflow. I assumed that institutions finally, for a lot of the reasons you said, the safety and the custody and all of that stuff, institutions now are coming in. Also, their mandate allows them to now do that, all of those things. I did not think it would be this much this fast. And Strazza's like, well, I never even thought about it. All right, cool guy. I want to know what you thought, Eric, going into this situation, and then now looking back on it, did you underestimate it? Did you overestimate it? Were you spot on? Let me know what you thought. What you think?
So I think I correctly estimated the first couple days. It was there's fanfare. They line up, all the issuers line up friends and family, and you expect some hurrah, and there was. And then it kind of went down, right? And I thought, okay, it's going to settle into like 50 million a day. But what I did not expect was the second wind. About week 4, it just started creeping back up. And then there was a day where they netted $1 billion. And I was like, holy shit. What the hell's going on? This defies normal launch physics, even for a hyped up launch. And then they started trading like 10 billion a day. I mean, IBIT was in the top 10 most traded every day. It's kind of gone down to about number 15 the past couple of days, but that was crazy stuff. So basically, these ETFs were starting to pull in the kind of cash that you would expect a Vanguard fund, and not just any Vanguard fund, but their top cash getters. That was weird. And so I thought the second win was really impressive. And I thought that what also impresses me and what I try to explain to people is even when Bitcoin has a rough couple days, the ETFs tread water. Maybe they'll see an outflow day here and there. Remember, they're all fighting GBTC outflows. So they're not just going from zero. They've got to overcome GBTC and then go. And they've been doing a good job of that. GBTC dumps 300 million, they'll do 310. GBTC dumps 50 million, they'll do 200 million. Sometimes GBTC dumps 300 million, they do 200 million, and it's a negative 100 million. And people are like, oh my God, they saw outflows. But the 9 that aren't GBTC have done a great job of taking in money every day. One stat that's also interesting is IBIT and FBTC have taken in cash for 55 straight days. That's insane. Amongst active streaks, I think the next one is like 11 days.
Wow.
Right? Against all-time streaks, they're already in like the top 20-ish in terms of all-time streaks ever. This is amongst 5,000 ETFs launched. And it's never, ever happened with a new fund. Usually a fund launches and it gets hot, year 3. Or it's a Vanguard fund that starts to get big. But it's really weird for a launch right off the bat to just start a streak and go to 55 days. I've never seen that. It's unprecedented. So I think the only thing that I worry about is that the When Moon crowd, which is like the complaint, the people who expect like 10% returns a day, they've gotten spoiled rotten with this. They're now ARK saw $87 million of outflows yesterday, even though the other ones made up for it. And they start crying and moaning and bitching about 80 million out. And ARK took in money 50 out of 55 days or something. Oh. People have to chill out a little. I would look at it this way. You have to just acknowledge that even if we stop now and went to the end of the year with no flows whatsoever, it's a smash hit, a blockbuster success for the first year. So I would look at it that way and look at anything else that happens from now as gravy. That way you've got to manage your expectations, I think. So they blew away my expectations. Now I'm already bracing for, okay, maybe there's a couple outflow days. Maybe somebody gets spooked by the volatility. Maybe some friends and family that hooked the issuer up early. They're like, okay, you guys are fine now. I'm going to move my money out. So we could see some of that. ARK has a real policy of taking profits. So if ARK B starts rising up in ARK W and the weighting goes to like higher than Kathy wants it, she'll sell some. So you're going to find outflows here and there. I would just expect it. And GBTC, the good news about GBTC is I believe all of the sort of unlock legal, non-sentimental outflows are pretty much winding down. So I think that GBTCs should be more of a trickle. So the 9 will have less of a hurdle going forward, which I think is good. But I don't see the 9 being Herculean anymore. I think they'll settle into maybe, net 100, 200 million a day. And that's still amazing. And I think, again, I just want to sort of make sure everybody has perspective, because if you get used to the next 9 months looking at like these 3, I think you'll be disappointed. I think you have to sort of really keep perspective. And that phrase, the path to hell is paved with high expectations. I've seen it play out with these crypto people sometimes. They're miserable when they have 9 days in a row that are great and the 10th day isn't. And they sound like a spoiled brat, to be honest. I worry about them. I mean, so here I am. I'm a 60-40 guy. I just want 8% a year compounding.
Eric, I wouldn't worry about it. It's not your problem. Let them worry about When Moon. Here's a question. All this volume, I mean, you had more volume in IBIT than you did in SPY or QQQ. I don't know how many days you would have the data, but you'd know it off the top of your head. It was a whole bunch of days, right?
The volume in what? Say it again, IBIT?
In IBIT was more than QQQ and SPY for a few days?
No. There was more individual trades.
Right. Got it.
Yeah. So
not total dollar volume.
Yes, absolutely. So, but the dollar volume, so IBIT would be trading as a group. They traded in the ballpark of like what IWM trades, which is the third most traded ETF. So as a group, they were in the top 5 as a group. IBIT was seventh place alone.
Wow.
GBTC was big. At one point, I think there was 5 or 6 of them in the top 50. Even BitB showed up in like as 48th.
And that's total dollar volume.
Total dollar volume. Yeah.
Wow. That's unbelievable.
What's also interesting to me is the spillover. Since they launched, MicroStrategy is trading as much as Amazon. BitO, which we thought would be depleted because it's Bitcoin futures, it's seen a ton of volume, probably because market makers are using it to hedge and stuff. So, and also BitX, which is 2x Bitcoin futures, that started trading upwards of 500 million, $1 billion a day. So the whole ecosystem is just flooded with money. And it's like this gigantic, like I call it the getting is good. And so everybody who's been within earshot of a Bitcoin ETF has been they've all eaten. Even the last place one, which is Wisdom Tree, is I think closing in on $100 million. It trades about 20 million a day. If that was a regular launch, and we looked at the last 500 ETFs launched over the past 12 months, that would be a top 5% launch. The last place one.
Hold on, one more key point. I have one more key point here to make. All these other ETFs you're talking about, Eric, they all trade options. These don't even trade options yet.
Right. This is without options. This is without being on major wirehouse platforms. And this is with also just I think they have to overcome a lot of PR. I mean, SBF they just fined him. That reminded everybody that there's crooks here. So I think they have a lot of hurdles. So for them to do all this without those other catalysts kicking in, I think is really impressive. It's I anticipated $10 to $15 billion in net flows in the first 12 months. They're already at 12, so they're already like almost to my upper band with 9 months to spare. Now, Bitcoin could go crash, and it could spook some people. I do think the holders will be stronger than people think. I don't see 50% or 100% of the people leaving. But you could have 10% of the flows that came in getting spooked if there's, say, a 30% drawdown. But if they can maintain this sort of like band above whatever and maybe even go up, I would assume my inflow expectations would be blown away. We're not going to reset them. We'll just basically give credit to the market for doing a good job. But it looks like 15 billion is going to be way underestimated.
Is that where we're at? Is that total assets in all the Bitcoin ETFs?
No. So total assets is 55 billion.
55 billion.
Yes.
So what's the total crypto market cap, JC?
2.6. Bitcoin specifically is 1.3 trillion.
How big does that number get relative to Bitcoin market cap?
Great question.
You mean like, so the ETFs own 4% of all the Bitcoin?
Is that what it is?
Yeah.
So got to go higher over time, no?
Yeah, it'll get higher. Trust me, because I have seen something interesting. If the ETFs see flow day in and day out, there's been a run where they have like 7 days of struggle, but Bitcoin will still like struggle or go down, or it'll go down worse than if the ETFs do nothing, Bitcoin goes down 6%. There are definitely people selling. I've heard that it's leveraged traders. I've heard that it's people who got in early, who need money for stuff and are cashing out. So it does appear there is some kind of a transfer from some of the crypto world into the ETF world. And the ETF world will slowly, that 4% number should grow because of that. Yep. And so I think you could be at ultimately 15, 20% here, because we're at 4% in 3 months. I mean, just do the math. The other thing is,
and then MicroStrategy owns another 1%, right?
Yeah, MicroStrategy's at 1 or 2%. But I'll give you some context here. ETFs own about 8% of all stocks. So Bitcoin's still a little less than that. Wow. ETFs own about 1% of all gold. So they're 4 times that already.
What percent
ETFs,
of all stocks? I missed that.
1%.
No, of all stocks.
8%. 8. And then ETFs own about 4% of all bonds. So they're right about the bond level. So they're already kind of right in where they are with others. So I think I'll see them surpassing the stock level. There's so many players in the stock market, but it seems to me that based on what we're seeing, ETFs, no, not 80%, 8.
Not 80%, Rachel. 8.
Sorry. Yeah, don't, that would be some article. I would get in trouble for that. 8%. So yes, I'm actually just responding to the chat. I would see them getting to 15, 20%. And I think the 8% in the stocks, by the way, is an interesting stat because I have to kind of remind people that ETFs are not the tail wagging the stock market dog. And now I find the same argument happening in crypto. People are like, are the ETFs controlling the market or are other players? ETFs are now a legitimate part of the market. What I have noticed, I heard in Asia, they have algos that are basically trading off of the ETF flows. So if the ETF flows are positive, they buy Bitcoin. So there could be amplification on the ETF flows. So even though they're only 4%, the other thing is this, there's something called float. If we talk about the float of Bitcoin, how much of that Bitcoin actually is up for grabs? So if we know 18% is people who lost their Bitcoin, that's off the table. There's probably 30% of people who are just never trade, like the Michael Saylor types. So I think half of the cryptos, the Bitcoins, probably you cannot trade it. So of the float, you could already be at 8%. Therefore, I do think the ETFs will have an impact on things, but I don't think they'll be everything as we've seen.
And I think you're being a little conservative on that float, by the way.
Of what float? Of
the float that you're referring to, of what's being traded and not traded in Bitcoin. I think you're being a little conservative with your estimates. I think it might even be more than that. But to your point,
you mean that? Okay, well, what percent of all the Bitcoin out there do you think could be gotten if there's like I guess at some point if it goes higher, that number goes up because more people are willing to sell at a higher price. But what's interesting about Bitcoin is you've got 18% gone forever. So already that 4% is about 6%.
Yeah.
So as we get more into and Saylor will never sell. So there's another 1%.
Right.
So as you add up the people and the government owns a good chunk of it.
Do they?
Anyway, yeah,
Really?
the government owns like, I want to say like 8%.
Is that the U.S. government owns 8% of all the Bitcoin?
All governments, like just governments in the world. I guess when they seize it, they own it. Like the way they own like cocaine if the drug bust.
Got it.
Something like that. But
do we know how much the U.S. owns?
I can get that for you. I forget. Hold on. I can pull it up while you're on the phone. Because I want to make sure I got this number right.
Don't they seize it though and then auction it off like they did with the FTX assets? Don't they
Yes, I think eventually they do sell it. So I think
maybe they're hodlers.
I think for some of them, I'll give you the number right now. This, by the way, I got a quote that it is from Rivers. Hopefully they're reputable, but this person who sent me for this ETF person, a Bitcoin person. So governments own, 3%. So they own 3% of the Bitcoin. Businesses own 3.6%. Individuals own 57%. Satoshi owns 5%, and I guess he'll never sell or whatever.
Or she.
So you have 5 and 17. That's 20. That's a quarter will never sell. So the float is an interesting part of the dynamic, and I think that's why you could have ETF flows that are, say, $1 billion in one day, have more than $1 billion influence in the market cap increase because the less float, the more that buy order should increase the price because there's less market. Make sense? In other words, the price should go up quicker if there's less people selling for that buyer. So float versus total Bitcoin to me is a underrated part of this story.
No, agree 100%. I think the demand side of the equation is so much more important than the supply side. People keep talking about this halving, right? 93% of all the Bitcoin's already been mined. So half of whatever's left, is it going to make as much of an impact on the supply? Like it's not bearish, I don't think, but how bullish is it? I think the demand side of the equation is definitely the story.
Yeah, absolutely. And I think, look, I somebody just commented on Twitter that the F in ETF stands for fake. Which is like, because I got this a lot. When the ETFs launched, people were like, it's paper money, fake, not your keys. And I get that. If you are the kind of person that is all about quoting how FDR confiscated the gold in the 20s, and you're all in and you see like a Mad Max future where everything collapses and the people with the Bitcoin rule the world and the water and all that shit, you definitely should not use the ETF. This is not for you. But for most normal people who can't barely remember Amazon passwords and are busy with shit,
it's the opposite.
ETF is the perfect solution.
Okay.
It's safe, it's convenient, it's cheap, it outsources it. It's even got the SEC stamp of approval. It's beautiful. So let's just make that clear, because a regular person who they might not even have that Mad Max vision, but they kind of are buying into the idea that this is an interesting risk asset, and I don't want to kick myself if it goes to $1 million. That alone gets people in. And the second thing is, I think most people understand that devaluation of the dollar and inflation can actually take away from your other investments in real terms. Most people understand that, and that can be another reason to buy. But even if you understand those two things, or you buy for those reasons, most of those people are not going as far as the Mad Max Afterworld, where you have to own it or it doesn't count. They're cool with like just getting the ETF and basically outsourcing it, and they never have to worry about it. They don't have to worry about the words. I saw some guys trying to dig up a landfill in Scotland because his hard drive got thrown out like 10 years ago. So he still wants to like dig, because it's like $500 million. They got to make a documentary about the lost Bitcoiners. I want to see like 4 studies, almost like they did the quarterback documentary on Netflix.
Some of them on YouTube, Eric. There's some of them on YouTube.
Okay, there are. Okay.
Hold on. This is a good question that I have for you. Sorry, Strazza. This is important. You're talking about the regular person, the everyday people, the non-Mad Max and all that stuff. But isn't the real story here, and maybe I'm wrong, but for me, isn't it the ability for institutions, for like real commas and zeros, to now step into this market for the first time ever because their mandates allow them to, because even for the comfortability of the SEC stamp of approval, but even just the mandates now allow them, when they couldn't go over to the old block and chain, now they could do it like if they're buying ARK or if they're buying XLK or whatever. Isn't that the big inflow, not the mom and pop?
I would say both. Let me ask you this.
50 though, Eric?
Well, hold on. Do you consider a financial advisor retail or institution?
Let's call them retail.
Okay. Now remember, financial advisors have $30 trillion in assets, and they are the primary users of ETFs in general. If you take all ETF assets, all 8 trillion, financial advisors are 70% of that.
Wow.
They love ETFs. So advisors, to me, are the main market for these. So here's how I look at it. I would say 10 years from now, I would see the same breakdown. Advisors have 50, 70% of all Bitcoin ETF ownership. Mom and pop, regular retail, do-it-yourselfers, maybe another 15%. And then 5%, 8% would be institutions.
Wow.
Here's the thing about institutions, though. We talk about, pensions and endowments. They have a lot of money, but what they need is liquidity. So these ETFs are just now getting liquid enough. They trade $1 billion a day. Like, that's why IBIT trading volume is a big deal, because the one thing that the best bait for institutions is volume. One, because they'll use SPY still over VU and IVV, which are way cheaper, just because SPY is more liquid. They love liquidity,
right?
Because they can go in and out. They don't move the market. No one knows it's them. It's quick. It's convenient. They won't go into an ETF that only trades 20 million because they got to buy $100 million worth. But if something trades 2-3 billion a day, they're like, I can deal with this. So institutional interest should come in the coming months and years. That's why institutions are gonna arrive. But they will be a sliver, 5%, 10%, in my opinion. The bigger money that I think is really what's going to happen is the advisor world. Now, advisors, they don't bite on day one. They do have due diligence processes. They have to talk to their clients about it. They got to do education. They've got it. Is my platform comfortable with it? Those are the people that are interested. And to your point, they cannot self-custody. So for the longest time, they had a choice of going to like Coinbase or whatever, and they're fee sensitive. They don't like the commissions of Coinbase aren't great. So, and they, like I said, they love ETFs. They trust ETFs. So having a Bitcoin ETF is like meeting them on their terms. Yeah. And so the advisor market.
How much of the 55 is financial advisors?
How much of the 55 billion? In my opinion, it's a low amount right now. I'd say 5 billion of that. I think now.
When will you know? Like when they do the FDV, what is it called? ADV?
The 13Fs.
Well, the financials. True. Because
they're called
what they own.
The 13Fs are going to come in starting soon. So I looked at IBIT. IBIT already has 9 owners that we know. Every owner is a mutual fund so far because they report holdings every month. That's interesting. That's another underrated buyer of these. And I saw Morgan Stanley's European Opportunities mutual fund put a clause in saying we can buy Bitcoin ETFs.
Oh yeah.
And I was like, what is a European? And it started to dawn on me. If you're a mutual fund and you're getting your ass kicked by index funds right and left, Bitcoin can be like a PED, a performance enhancing drug. You can add a little Bitcoin ETF in there just to give your performance a little kick in the ass. And maybe it makes you beat your European benchmark, because that's the only reason to do it. And so I also think it can help hedge from currency risk or whatever as well. You can basically like convince yourself that's why you're doing it. So I think over time, the mutual funds are also an interesting market for this. So we've seen those people in IBIT. Over the next 2 months, we're going to see more advisors come in. Who owns IBIT? Remember, this is only the first quarter, though. Let's give this a year. Yeah. And I bet we'll see a bunch of advisors. If you are able to see 13F filings for an ETF, I would recommend going to something like IVV, which is a BlackRock ETF, or even IAU, that's their gold ETF, and look at all of the holders. You will see that it's mostly advisors in there, plus a couple of institutions, and all of those holders, which we'll call professionals, will make up about half of the shares outstanding. The other half are too small to actually file a 13F. We'll call those retail. This is exactly how I see the Bitcoin ETFs playing out over time.
That's fascinating. I underestimated just the sheer amount of money coming from the financial advisors, Eric. That's fascinating, dude. Seriously.
Steve, I feel like you have something to add. Steve,
we'll talk about it. We'll let Eric go, and then we'll talk about it. I think there's a lot of inflows coming from people who are already involved in Bitcoin, but they just want to hold it somewhere where they're more used to. Like for me, one of the biggest things getting a big account size in crypto was Coinbase finally filing focus reports, net capital computations, customer segregation, right? And basically acting like any other Wall Street institution. If that never happened, I never would have wanted a large crypto account. Even now, knowing my money is with Coinbase, I would rather it be with BlackRock. And how many other people are thinking that way? And why wouldn't they be thinking that way? Even if it's the right thought to have.
The other thing I noticed is Coinbase, the commissions are brutal if you're retail. An ETF is 1 basis point to trade. 1, not 100, not 150, not 200. And the fees are so low. The US ETF market I call the Terradome because it's freaking brutal. Vanguard and BlackRock aren't effing around. And the fee war played out in the few days before they launched. They're already between 20 and 30 basis points. That's cheaper than I thought they'd be. If you go to Canada or Europe, they're all 2%. That's why I think Grayscale underestimated the viciousness of the fee war in the US. I thought they thought 1.5% wouldn't be that much, that'd be in the ballpark. But 25 basis points, 20 basis points, plus you got a brand name. And in Bitwise's case, you're donating a little to the crypto world or whatever. A lot of perks come with it. Plus you get the security of knowing that it's this high brand issuer. This is why the advisor world to me is the real market here, because all of those people have hesitations with all those other ways. And Coinbase freezing up 3 times already since I've gotten into this. Since they launched, Coinbase has frozen 3 times. Yep. The New York Stock Exchange is not going to freeze. So I thought it was a big win for TradFi personally. Coinbase is frozen, but you can still trade the ETFs. So that's another win for regular people are like, yeah, that's why I use the ETFs. You don't have that bullshit.
Eric is such a TradFi bro. I love it. So am I.
That's great.
Me too.
I know. I get. It's funny. Have you seen that TradFi bro account?
Of course.
Yeah. Well, everything that guy says, I agree with, but I still find it funny.
Of course.
I don't know why. It's like the 80% a year.
You're the meme. You're the guy we're making fun of.
It's still funny. I don't know why. I still find it funny, but I kind of agree with what he's mocking. Like, I do think 60-40 is worthwhile. And let me ask you this, and I know because you do stocks too, right? I mean, I see Stock Market TV behind you.
Oh yeah, of course. Stocks, ETFs. Of course.
Have you ever gone on a hardcore crypto podcast? Or do you have talked to these people? Like,
yeah.
If you start to inquire a little, they're 100% in Bitcoin or crypto in general. Yep. They do not believe in stocks and bonds.
Right.
I was surprised at this because Stocks, the company, you get cash flow, like it works for your money. That's why the Credfo bro guy is always talking about dividend stocks and cash flow. So I'm like, it's funny, but actually that's the truth. Like people create value at the companies. You profit from that value created. Your money works for you. In bonds, you get a coupon. It falls on deaf ears.
I know, Eric, because the way you grew up and the way I grew up, like these kids grew up gaming, these kids grew up in the meme culture. It's night and day from the way, traditional TradFi bros have grown up. So for them, what we do and how we look at the world is just strange. It's just weird. For them, the things that you and I are kind of like chuckling at, that's normal for them. Perfectly normal.
Yeah. The only thing is, I guess like they just think inflation and devaluation wipes away anything that could be good from a 60-40. And I'm not sure if I'm there. I understand the devaluation argument. I mean, I'm just curious, where do you stand in that? Like, they'll say, well, if you look at the real value, you're really make no money. All of that is an exercise in futility. You got to go all in on Bitcoin. Because I asked, has anybody ever 60-40 pilled a Bitcoin person? And everybody's like, it's impossible. It's a one-way street.
Well, I think this is for another conversation, but I think the 60-40 is stocks, commodities, not stocks and bonds.
Yeah,
in this part of the cycle, because now we're in an inflationary regime. But that's another conversation.
Eric, we've kept you on for far too long. We really appreciate your time.
Thank you.
Eric Balchunas, author of this great book. You should check it out. Bogle Effect. Great follow on Twitter and great stuff, man. Thanks a lot for coming on.
Thank you, Eric. That was great.
Thank you. That was fun. See you guys. Bye.
It's been a long time coming.